Welcome everyone. How we doing? Rudy, you doing good? Ricky, good to see you. Good day for me. I call it a little bit early. We got nice weather here for the first time this year, really. So I like to spend that time outside if I can. How's everybody else's day? Just got a few of you in here so far. Yeah, oddly enough, we froze last night like 30 degrees, but then it's 70 something today. So nice day. Dang, looks like them Netflix traders are gonna be demolished tomorrow, huh? Oh yeah, thankfully I don't get the allergies. We do have some serious pollen issues around where I am. Oh yeah, we got bingo tonight, 1K. We'll make sure we call it early to get in our early dinner and bingo. Nice, Ricky. Full day trading. It's always fun. I love trading. I love watching charts. What was Netflix at close? 610, huh? These things are gonna be clobbered tomorrow. Any Netflix degens in here? Hoping for them 100-point Netflix moves that didn't come. Yeah, it's weird. I mean, especially it's weird for me too. I'm lucky on the West Coast. We start at 6 in the morning and are done at 1 in the afternoon or something. So I still got a whole day ahead of me. But I'm also not really the type of person to sit inside in front of a screen all day. That's not really my thing. I just like charts. Oh yeah, I did. I hit a decent one on this thing today. I didn't at the time realize it was going to be good, but I took the entry somewhere up here on some shorts, but I was unfortunately all out. I mean, you can see it. I think it's here, maybe it was here. I don't know, one of these. I got a nice, I think, oh yeah, because I think I was just targeting down to that gap level. Let's see. Oh yeah, I think we were just up here, and I think I was just targeting that top of the gap again. Didn't realize we were gonna go a few more bucks. But then I stopped trading right here, and then I posted my tab and said, "Be ready for a big move." And then this happened 3 minutes later. Someone tagged me, made fun of me. That always happens. Yeah, and this one was honestly a higher risk short. I just entered it up here knowing that my stop was only going to be, 30, 40 cents above me. So I wasn't super concerned with it. I figured we'd at least try to get back into that opening range and retest the gap top. Um, but then we had a Fed speaker or something, which I forgot. And so we got to selling. Took some out the money puts. Yeah, those are toast, but at least it didn't go at the money puts. Yeah, Bulls they got faded. But then, I mean, God, I mean, market just needed to come somewhere important. And we're somewhere important now heading into ER. That tends to be how we do it. I mean, it is, there's no denying SPY getting beat down on for sure, but I think the main thing anybody should be watching is obviously just this gap back here. And we have to say, is the market going to give us the easy, obvious trade to like fully fill this gap, or are we going to see a couple of decent ERs and we're not quite going to get there and we're going to push up? We'll see. But I think this is definitely what everybody should likely have their eyes on. It's kind of what I've been trading around. You can be cautiously long above it, when we're holding it. You can buy those dips down to it. And easy to be short once we break into it. Yeah, Netflix did not move enough for anybody to make money, I'll tell you that much. I mean, I was just looking at these, I had them pulled up. I mean, if you went a 680 Netflix contract was costing you 1,200 bucks, or 580 rather, sorry, was costing you 1,200 bucks. That's where we ended up. But tomorrow's Friday, I think. Yeah, tomorrow's Friday. So those things are not going to be looking pretty come tomorrow morning. That's for sure. I mean, you got to figure that's going to be the same day at the money expiration. That thing will be worth $200 at open probably. Welcome, welcome everybody. How we all doing? Yeah, so yeah, that can be a tricky thing when you look at, when you look at ES, it's always important to remember that because it trades 23 hours a day, you won't see those gaps unless, you have a contract changing, those kinds of things, because the data for those daily candles is actually calculated different. But if you pull up SPY or SPX, they'll be on these charts. For any of the SPX traders, just to show you some levels, that 5039, obviously Tilio has been talking about that one. If you don't listen to Tilio, start. And then 4984, that's the other side he's been talking. You can look to be short down there, look to target some of these lows, all the way back down to that previous all-time high. Not saying that comes, or we break back above this, and I would personally be kind of trying to trade up to these highs on the last push up. Bobby, how you doing? Shake and bake. SPY, technically speaking, SPY trades 24 hours a day. So that's why if you pull up the SPY chart, it's always moving, even if it's on, no volume. It's always kind of moving around, and you'll see it moving all the time. However, uh uh the daily candle still only reflects the day, like it from New York open to New York close. But as far as the 15 minutes after close, when people talk about that, that's for options. You can actually, there's a list of ETFs. I don't remember them off the top of my head, but you can trade them for 15 minutes, the options after close. And so it can be a slightly safer way to play ERs or things like that if you want to take the cheap gamble on the pop before. But a lot of time, you can get in trouble if the ER doesn't report within those first 15 minutes. But those options will trade 15 minutes after, because I think gold does too, or GLD, SLV, QQQ, obviously, IWM. I believe those all do. I've only done it with SPY and QQQ personally. Okay, and we will get going here. Give me just 1 second. Okay, and so we will get to going here. How's everybody doing? Happy to have you here, Dirty River. Thanks for coming. Tonight we are going to be talking some low IV stocks. I've done this lecture a few times in the past. I'm sure most of you know the ones that I'm going to talk about. And these are just a really great thing. I trade them all the time. I almost always have a trade running on one of these cheaper names. It can just be a nice safe little thing. It might show you a nice percentage. Each contract's not going to be huge dollar gain. We'll talk about a couple that can give you some nice dollar gains, of course. But it's going to be more about percentage. And I'm going to kind of talk about tonight, and I remembered to share my screen properly. Go into a bit of contract selection while we're talking these. Something that I see people just really, really struggle with in OOT is contract selection. And so it's something that I've wanted to start touching on a bit more often, because some of the contracts that I see people are in are like they ask about on trade floor or post in GainStab or whatever it is. I just have no idea what they were thinking. I'm happy that they made money or, hopefully they made money. But it's just uh uh it's just not what you want to do. It's not how you want to trade. I mean, those far out the money ones when they hit, awesome, super great, really fun. But you're gonna lose a bunch of money on them trying to trade those, way out the money contracts until you finally hit the one nice one. And so we're gonna touch just a little bit on contract selection tonight. These are the lower IV ones, the cheaper to trade ones. So it's all basically going to be the same story, at the money, even in some cases in the money if that's what you want to do. We'll touch on some of those. But we will get to rolling here. Nice, Caleb. No, it sounds like you're just smart. Yeah, Rev, I had a decent one. Like I said, I called it early. Yeah, Microsoft got smoked. I didn't like that entry on Microsoft. And who was that? Zane? Was that Zane talking about it? Yeah, he was talking Microsoft like right here, and I just can't buy calls when he got opening range right there and hourly 20 overhead. That ain't for me. Okay, but with that, we're gonna get into low IV stocks. We're just gonna talk about some of the ones that I always talk about, always hint at, whether in my tab or in trade floor, whatever it is. And the ones that I've picked for tonight, I only have about five. I got five that I'm going to talk about tonight. I'm talking about them specifically tonight because I think all of them are basically at an actionable area where you can look to trade on them, and it might be worth it to put those trades on. And so we're going to do our best. Market's a little bit volatile right now, depending on what side you're on. It's been real good or real bad. So with all these earnings comings, with all of that, we do want to be cautious on some of our trades. And then of course going into Fed data, whenever we start seeing those CPIs, PPIs, FOMC, always on the horizon. So we're going to talk some trades that I think have some, a pretty high likelihood of, paying or giving an entry, or, at least giving a nice entry that won't hurt you too bad if we're wrong. And so first one we're going to start with XLE. For anybody who doesn't know, XLE is the energy sector of the S&P. And so with XLE, I'm not going to look them up. You're basically looking at oil companies. Those are going to be the largest holdings in there. There's some that, there are some companies in there that are involved in solar, but you just want to think of it as energy, whether it's oil, whether it's natural gas companies, there's even some, it's a large holding. But most people think of it, I myself think of it, as many others do, think of it as trading oil, because you have those big oil names in there. They're the largest holdings in there, and they will, to some extent, track with the oil trade. And so I am kind of a weird one. I personally don't really, unless it's a scalp, I personally don't trade long on oil. It's just not something that I like to do. I do love to look for a good short on oil. Same as XLE, you'll rarely see me long on XLE, but if I am in XLE, I'm frequently going to be short on it. And so with XLE right now, and I guess I should say this, so I'm kind of starting to do a little bit of a new format with my lectures where, we're going to talk about these things. We're going to learn about low IV stocks, what they are, what we mean by that. But then I want them all to kind of be charting as well. As most people know, the last about 9 of my classes, I've kind of done exactly how I trade. I still haven't got around to it, but I'm going to get them all pinned in my tab. So from now on, my lectures are basically going to be the exact course of how I trade. We're going to use all of those things to, tonight we're talking low IV tickers. So tonight we're going to use the things we've learned about, support, resistance, trends, volume, ranges, all of those things. And we're going to look for some potential trades using them. So while we are learning low IV stocks, we're also doing charting lectures where hopefully people can kind of follow along if they, I'm gonna, always trying to do better at following the chat, still doing horrible at following the chat, but try to answer questions or any ideas people have. Like I said, I only have about 5 that we're gonna go through tonight. And so hopefully we'll have some time at the end. I know some people have given us some really good trades recently. Our last class, man, some people gave out some bangers that ended up playing really good. So I want to start doing that and having the good involvement from you. Okay, so with that, XLE, as always, for me, I start on the daily. That's where the big picture is. That's where everybody should start. Whether it's early in the morning and you're going into the day and you want to figure out where your bias is, or if you're just looking at a stock for some sort of, potential long trade, short trade. As all of you know, in my opinion, entry is everything. And so starting on that daily, getting your levels from the daily is frequently going to give you an idea of where the best entries are going to be. And so as with all my charting, I'm always going to just mark any sort of major highs that we've had. Major high here, major high here, major high here. Only other one I'm going to chart is going to be this one. I'm basically getting this level right here. And so to me, these are the big areas of support below us currently. Then you always want to look to your upside because you want to have an upside target. Because of the run that XLE has been on, we're up here. We do not have very much data in this area. So our levels are limited. So as we've learned, we have to use something else to give us an idea of where we might want to trade to. We can slap this 98, 97 high on us, but there's no reason for us to even be, considering this level when we're trading at 93.80. You always want to keep your targets realistic. And so I'm personally always going to look for an SMA. I love the simple moving averages on the daily time frame, weekly time frame, a little bit on the 4-hour, not so much, but love it on the daily and the weekly. And so right off the bat, we can see we got a real major one right here, 20 SMA. First time we've traded below it. And I mean, God, 2 months or so, we're finally seeing below that 20 SMA, just on some of the weakness we've seen in those energy names. But to me, this is a really nice level to be trading towards. So as I said with anything, I lean bullish. Everybody knows I lean bullish. So I typically don't try to catch the big, huge shorts down. And I would much rather, especially in a very bullish market like the market is right now, I would personally rather, look for areas to buy for a bounce as opposed to trying to catch the short down on, short volatility or whatever it may be. I would rather kind of just hang out and wait and look for that bounce. So that's what we did back here. These 2 zones that we have made are where I want to look to catch a bounce on XLE if I'm looking to trade it long. So super simple trade. You can trade it one of 2 ways. Buy any dips down into this zone right here. This 93.88, 93.65. If you want to ride a really tight stop, then have your stop be a close under those levels. However, if you're looking for, maybe a more dramatic bounce trade, you're buying more time, you can always take your starter entry here and then your full position here, 92.80, 92.57, anywhere in that little pocket right there. Then you can kind of look left and you can say, any sell below 92.20 area going to be the hard stop out because we'll likely go visit this 90. We're going to go visit this 90. However, if we look to be bouncing, that's why you wait to add your second position here. And then obviously upside target, we can, the simple ones are really just going to be highs where we've rejected. So we really only have one in this area up to this 20 SMA. So we're looking for entries 93.80 to 93.60, basically a 20-cent drop to catch a $1 move to the first step and then another 70 cents up. So about $1.70 for the upside move, only risking, if you have the loose stop, basically a buck on the downside, if you have the tighter stop, then you're going to be risking 20 cents a downside. So XLE offering a very, very nice trade. Then the next part of this, you have to move into contract selection. And so XLE is interesting. We're talking about it first because it kind of does, you know, it kind of does, you know, it moves a little bit faster than the other ones we're going to say, or the other ones we're going to look at tonight. And so I know most people will be interested in this because, you know, XLE can put in a dollar move easier than other things can. And so how do you trade it? And what are you looking for? And so it all depends on your risk tolerance and how fast you are looking for the move to be made. And so if I'm going to take a trade on XLE and maybe it's intraday and I'm just looking for, you know, maybe we've sold to the 65 and I'm looking for the bounce back to 94, not a big move. Well, on something like that, I mean, likely won't go a same day, but I'm only going to go for the next week contracts at most, looking for nice high delta right at the money, so that we can see, you know, a larger dollar return from a smaller move. Then my next rule of thumb is when you are picking your strikes, you want to be with whatever your target is, you want your strike within that target. So as I said, if we're looking for this 93.65 bounce up to 94, I'm not going past 94, you know, on those next weeks. However, if I'm looking for this to put in a little bit of a bottom, I might even add to my position down here. That's when I'm going to start looking at maybe 3-week out contracts. Bad liquidity on these. We should probably pick a different day for some better liquidity. So 4-week out contracts. And I guess I should talk about that. So see this contract right here? 173 open interest for volume. Don't buy contracts like that. You know, I don't care if somebody's alerting them. I don't care what's going on. Don't buy low OI contracts. We can see right here, bid side, 175 bucks. Ask side, 440 bucks. That means there is no interest in that contract, so don't buy it. So we ignore that. We go to the next one. 14,000 open interest, 1,500 volume. We don't, you know, we don't want to read into this and say, oh, 14,000 people think it's going here. We are more concerned with over here. I am much more comfortable with a $10 spread than I am with the $300 spread. So we come here, 4-week out contracts, 220 bucks, 53 delta. We can now really plan our trade. If we're looking for the dollar bounce up, we know we're going to make about 50 bucks a contract. If we make it this full move up, we're going to be doing $110 a contract with the delta increase. On the other side, if we stop out, we're losing $5 if we stop out here. All the way down here, if we end up taking this stop out, $1 below us, we're losing. It'll be slightly less than 50 due to Gamma pulling that number down, but we're going to lose $40 to $50 on the stop out. So we're looking at, you know, potential $50 return with the tight stop. We're risking 10 bucks. Really nice risk reward. This one, not as good risk reward. So that's why, you know, I don't love the full entry here. I do love the full entry here. If you enter here and end up having to take this stop, well, you're basically risking 50 bucks to make 50 bucks at first profit target, which is not ideal. So if I'm looking to trade XLE, those are the two ways that I'm going to do it. I'm either going to be buying, you know, some weekly contracts or next week contracts for a quick bounce, right at the money. If not, then I'm going to be buying some, you know, month out contracts, at that 94, 95 area. Not going to go beyond 95 because I want to keep my strike reasonable. So that's XLE. Oh, wow. Is SPY doing something? People are excited, huh? Oh, that actually does look like it's selling. Yeah, probably just went down $1. Nice. Okay, so that's XLE. Any questions? Hopefully not. Feel like I covered it well. Very simple trades right now. Looking for that bounce. I guess we could kind of touch on if we do start giving this zone up, you know, all the way down, give this up. then we can start to look for that trace back down to 90. But for me, I'm still personally looking at the bounce trade. Next one I'm looking at XLF. And so XLF slightly trickier trade here because we've had a big sell on, we've had the, I do want to start this over. Oops. So we've had the big sell leading into all of these, or not all of these, but we've had quite a few financial earnings. I don't remember all of them off the top of my head, but we've had quite a few financial earnings now. And for the most part, they have all put up very good numbers, in some cases, great numbers, and they've been sold on. I think part of that is that forward-looking guidance, looking at a little bit less profit, a little bit less growth than they had last year. I personally feel like that should be expected. However, the market is not quite ready to buy financials yet. And so when I was, kind of thinking about trades that I wanted to talk about tonight, this was one that just really stuck out to me. We had this previous consolidation right here. As most of you know, I love trading ranges. I have very strict rules to trading ranges. They make it super easy. We talked about these last week. Unfortunately, the market then started making big moves, not ranging. Well, whatever. Fortunately, it's been fun. So we have this range right here. We were stuck in it for, the better part of a month. And the market was very happy with the prices there. So XLF is providing to me, XLF is providing to me a very easy level to trade off. To me, super simple. Looking for a retest back up to this 50 SMA. Eventually, we obviously have 40 right in the way. But looking for this retest up to this 50 SMA. But this 39.50 line, I have 39.47, but 39.50, nice round number. If we're closing in there, I start to feel pretty dang confident that I'm going to be able to get this dollar move down to the bottom of this range. And so that offers very, very nice short trade. Obviously, we are going to have, this isn't just going to dump to the bottom. We're going to have a little bit of resistance here or support here. Could even potentially have a little bit of support here. However, we're going to talk about contract selection going into this. So short trade there is pretty easy to run it all the way down. The other trade, as most of you know, like I said even earlier, I like to look for bounces. One of the things that I was taking note of is we have a downtrend, obviously, and there's another one. Of course, people are going to want to talk that one's there too, not denying it, but this trend is here as well. We're having our first attempt over it, failure. Obviously, this was a failure. This was where the trend started. However, tomorrow's candle will be opening outside of the trend. So for me, the trade that I am really looking for on XLF is going to be this candle opening outside here and giving me this trend retest 39.50 area test. The risk reward here is phenomenal. Your stop out is a stop below 39.50. You're going to be risking cents, definitely not losing a lot of money on that one if you do have to stop out on the bounce. And then, as I said, you can roll into that short and maybe try to catch some trend tests on the upside all the way down to the bottom. But I'm looking at this XLF bounce off the 39.50. As I said, I don't know if the market is necessarily ready to buy financials just yet, but I do think sooner than later they're going to step up. Financials have been really strong. The banks are still making really good money. I haven't seen, and I could be wrong. I know Rev reads a lot of them too. I haven't seen any bank ERs yet that have me concerned, really. So I do think that the market is going to go back into buy mode. As we've seen, big picture, financials have been very strong, up 30% off the lows end of last year, maybe more than that. And so very, very strong sector that I think will likely remain strong. So I am definitely looking for the bounce there. Next one I'm going to talk Unfortunately, we're a little late on this one. I did mention it in my tab today. We can do we'll do it. Let's see, I probably got one. Yeah. Oh, look at that. The good old days. T, as all of you know, I love to trade T. Obviously sharp sell-off heading into earnings next week. Something that I think everybody should kind of have their eyes on. And then as always, you know, you want to just kind of, with any support and resistance, you want to look for major lows, get all those major lows marked, and then start looking for some major highs up here as well. And then for me, I love the SMAs. You got this 200 SMA down here right now, 1589. Really nice place to start looking long. And so tomorrow, or sorry, yesterday, I took a nice little scalp on T. We can actually look at this let's see. So right around here, I bought this dip, you know, I saw us above 16. I felt like we were going to push. Obviously, these aren't going to be the exact same levels I have on my charts. But I had a feeling we were going to get a nice little push up, and I saw some potential in this trend test. So I was able to get in some weekly T's on a nice little push up. However, then I started looking at T, haven't looked at it in a while, you know, don't like to short it personally. I love this stock. Don't like to short it. So hadn't looked at it in a while. And then all of a sudden I started to say to myself, oh, like, so 20 is now or 200 is no longer going down, has started curved up, is flattening a little bit. We're holding on to it. We have a trend break occurring, and we're holding this big 16 level. To me, you know, a bunch of people would ask me, you know, when do we get back in T? And my answer has been dips to 16, you buy them. It's been working for months now, you know. And so took the scalp on it yesterday. However, when we had this trend break today, and then when we were able to kind of bounce it, pull back to it, somewhere around here is when I mentioned it in my tab, that, you know, I'm looking at it for some upside. You know, shocker, I actually got to say, hey, take some profits into close. We had a nice, I mean, the boomer stocks had some nice pushes up into close on some market weakness. And so ended up putting a nice little move for us. So that's what I'm watching here on T is basically the 16 level. Worst case scenario is going to be a stop below that 200. If we break below the 200 SMA, obviously you can look to short it because that is going to be giving up something pretty dang major, and we might eventually go down here, fill this gap, revisit these 14 levels. But for now, easy to stay long on T. I'm long, still swinging on it. And so watching this trend break. Well, now again, we want to, you know, keep touching on these things. How do you trade it? As I said, we want to buy dips to 16. We know T is cheap. You know, I mean, the stock does not, it does not move a lot. It does not move fast. And so when you're trading something like T, you want to be at the money. Like there's no reason to be not at the money. And so what I'm currently swinging is some of these 16.5s, 3 week out. Don't love the low volume open interest on it, but it can be, you know, you can find some bigger volume, but it's never going to be a ton. And so these are what I'm in, few week out T's, the 16.5s. The reason I went for 16.5 was it's basically my target. It's really where I'm looking for us to bounce to first. If we get above it, great. But there, I didn't want to go 17s. You know, 17 when you think about it, $1 on a $16 stock is a lot, you know, I mean, that's a big percent move for it. So you want to keep those strikes reasonable. Another reason that I, you know, love trading T and something that I talk about with people all the time is the delta gamma correlation. So on these contracts, you know, they're $40. You have 46 delta, which is, you know, great. That's high delta. But that means that even a 10-cent move on the stock, you know, 8-cent move is going to pay you approximately 15%, 10 to 15% on the contract. And so that percentage can add up very, very quickly. Now, the other side of it is gamma. Very high gamma on these contracts. So what gamma does is tell you if the stock moves $1, how much is the delta going to increase? So if we, and again, you don't want to look for a $1 move necessarily, but we know that if we get a 50-cent move on the stock, which is basically what we're looking for, 16 to 16.50, our delta is going to end up around 70. So if we get the 50-cent move on this stock, the contracts will be up by give or take 60, 70, 80%. There will always be a spread. There will be a little bit of additional math we aren't taking into account, but that's where the power in trading something like T comes. You can make 50%, 60% on a 50-cent move on the stock. On the flip side of it, if we're getting in here anywhere down here, this 1650, 1615, all the way down to 16, the delta works in our favor down here, and the gamma works in our favor. We're risking a 20-cent pullback, so we're really only risking $10, $8. We're gonna lose 1/5 of a gamma, and 1/5, or 1/5 of the gamma is gonna come off the delta, and we're gonna lose 1/5 of the delta. So we're only risking a few dollars to potentially make, $20, $30 on the upside. So always worth it to go there. People frequently try to get, trade T. Oh, I'm in 17.5s, and well, great, but you only have 17 delta. So you need a very big move, you need a very big move to even make, one, like, to make your bid ask increase by $1. You need the stock to move 8 cents. Whereas an 8-cent move on something right at the money is going to pay you $6 on one of the closer strikes. And if it moves against you, these things go down $2, and that's 20%. So if you have a good amount of them, you are not going to be looking very pretty. So that's T. Like I said, really simple. Long above 16, we're above this trend. Any dip really down to this trend in 16 is one to buy, in my opinion, and just keep those stops at that 200. Very, very low risk, potential high reward trade. So hope everybody's following along. Oh, I do see we got some questions. Yeah, banks aren't required to hold deposits, but that's nothing new, Some will, well, I mean, Rev, yeah, some will make a mess. It happened last year, and they got caught, and they made a mess. So they've been caught, but don't think the big names are going to do that. Let's see. I swear I was just reading another message, and now it's gone. What time frame would you look for the stop out candle? So for me on something like T, like I said, it tends to move pretty slow. I'm really just going to look for a daily close. I'm not going to do like if I'm in a T trade and I see this thing breaking the 200 for, a 5-minute candle, I'm going to let that thing breathe, because chances are they're going to bring it back over it at least once. And so, I'm going to look for a daily close. I'll just watch it into close. If we're seeing weakness, I'll stop out down there. As I said, I already got a little bit of a trim, but I'm not opposed to a re-entry on it. Let's see. So next one we're going to talk KO. Nike Rev. Yeah, we might look at that. So KO, love it when a good old joke level comes into play for us. That's always a good one. So KO for me, two really nice trades right now, both very, very low risk. As most of you know, love trading ranges. This was a big trading range for us. Obviously I had it set, so I just don't adjust it. We're coming up to this daily 200 SMA. So obviously a huge level. 59, big level. If I put it on the chart, might as well just put it on the chart so y'all can see. 59, big level, has been absolutely crucial. So we got 259 right here. Coca-Cola offering two very great trades. One of them, in my opinion, more high risk than the other, but both of them worth watching. So main one, obviously I want to look for upside. This kind of goes back, boomer stocks are finding some buyers. I think, there's no denying investors are going looking for some safer trades right now. We're seeing a lot of it, some of that selling on tech and those names. People don't want to go risk on right now. They were risk on for all of 2023. So it's worth it to kind of, ease off the gas right now. However, Coca-Cola, similar setup to AT&T, big sell-off leading into earnings, now breaking trend, pushing to the upside, trying to reclaim some of those SMAs. For me, what I want to see from Coca-Cola is a push up over the 200, a push over the 59, and that is my entry. As far as stop out, it's going to be this 58.83 is going to be my, that is where I will stop out on a daily close. Risking 20 cents a downside, as we've been talking, I mean, if you're trading Coca-Cola, it's very cheap. Some, month out contracts are going to probably be around $100. If you take a 17-cent stop out, you're going to lose $5 or $6 a contract. No big deal. However, Coca-Cola has had some problems. People didn't like that aspartame news, all the Ozempic stuff going on. People didn't like that. Investors didn't like that. It has been quick to sell on a lot of its pops. So we have a higher risk trade, and one that I don't like nearly as much because it is much riskier. And we're going to be going, we're technically be trading with the trend for this one, but we will be also fighting a pretty strong breakout. And it's going to be basically the inverse. We want to be potentially, I'm not, this isn't for me, but looking to short somewhere in here, anywhere in this 58.83, 59. I typically hate the short at the bottom of the range. However, knowing that 59 is strong, it was strong support, now it is strong resistance. 200 SMA, likely strong resistance. Can be strong support if you're above it, but in this situation, gonna be strong resistance. So I like the short here if you're looking for it. Again, first target only going to be, if you can short 59, first target's only going to be this 20 cents below you, you'll make $5 or $10. However, break out of a range, and I like that short. So kind of two entries. High risk entry is up in here. Lower risk entry is a breakdown and retest of it. The reason that I consider this one more high risk is it's kind of the double-edged sword of the same reason we like the entry here. We have the 200 SMA, likely strong resistance. We have the 59, likely strong resistance. The problem is if you're short and we break these, we likely get a blowout move upside. So your risk is going to be dramatically increased. Maybe, maybe your plan is a daily close over 59. Well, if this thing is able to keep this big buyer volume juice it's got going on for day 3, you have a very, very good chance of getting blown out on the trade. So that's why I consider it more high risk. This one down here, if you're taking a breakdown retest, something like that, to reshort it, that one's better because chances we know we have these levels above us. So our stop is 20 cents above us. If we're blowing over them, we get out. This one, the entry doesn't really give us the opportunity to get out that we might like to look for. And so again, going back into Coca-Cola, honestly, I'm not saying, trade it on same days or anything like that. However, if we're trading right around this 59, this 200 SMA, and we look like we're going to pop it for $13, and these things will be $7 tomorrow, depending on the open, I like that for a little same day risk right there. However, if you're trying to take the safer trade, really looking for that breakout, we get the push above 59. For me, the contracts that I am going to like the most is going to be something with some time, really looking at probably going to this, the OPEX date, and looking at these 60s. We only get the, $2.50 strikes, but likely looking at these 60s. They're only $60, $38 delta. You're $1 out of the money, but that dollar move is going to turn your delta into give or take $70, $60 at least. And so nice dollar move out of this should give you somewhere in that 75 to 100% trade on it, with 4 weeks of time for safety. On the flip side, 38 delta. So if you're long and you're forced to take the stop out 20 cents below you, you're losing $10. No big deal. So KO offering a trade that could be very good both ways. Yeah, Rev, we'll check Nike. I added it to my list. I meant to say that earlier when I saw that. Oh yeah, you did hit those pet puts. Those ones were sick. Why use SMAs versus EMAs? I like SMAs on longer time frames specifically. And why I like that is because they're much more fluid. The math on them is simple, as is in the name, simple moving average. You know, for example, we have the 20 SMA. You take the close of the previous 20 candles, divide by 20, that's your SMA price. So it's nice and simple. It's based on consistent math. An EMA is much more difficult math and actually puts more emphasis on recent price action. So any big time frame thing, dailies, weeklies, anything like that, I'm always going to look at the SMAs because they're going to tell the story much better. You'll start seeing SMAs flatten out and give you a clue that ranges are coming. Whereas if you put on some EMAs, and maybe not on Coke because it's not the world's most volatile thing, but you put on some EMAs and you're getting crosses. Look, we got an EMA cross under right here before an explosion. We got another cross here. Gives a couple days of selling before bursting, And so I just like smooth, fluid look on the daily. And it's personal preference. If you like EMAs on the daily, hammer them, no big deal. Use what you like. I just like the SMAs on the daily. I do have a couple combos that I like. This 513 crossover, volatile, happens a lot, even on Coke, but picks up crosses soon. Like we're gonna get this cross on the 513 and be able to buy the dip into it and try to catch this move up. Same as here. We're gonna get this cross here. We're gonna buy the bounce up and try to get that move down. So there's times and there's places, even this one, nice cross here with a retest after the cross is formed. There's times for it, but when I'm trying to look at big picture, no emphasis on short-term movement, I'm always going to use an SMA personally. So next one we're going to talk about, haven't talked about this one in quite a while. Shopify. Let's see. We'll just start a new one. Shopify had a pretty rough go. Has earnings coming up, it's the one factor for my trade I don't love right now. Main things I'm watching, obviously, major bottoms here, and then major highs right back here. So watching shop, as you can see, kind of a similar setup to when we were looking at XLE, offering a trade both ways. However, my preference on this one, and ER could ruin this for us, we'll see what happens. Let's get the date on it. Oh, not till May 8th. We got 20 days still. We got a little bit of time. My preference on shop, oddly enough, I know that I'm normally Mr. Bull. I would really like to see it come down here, 63 area. And then, of course, if we are coming down to there, the preference is going to be fill this little gap. However, when we look at the chart, it's making it, I do want to go back to the SMAs, keep it nice and clean. It's making it nice and easy to trade around. Any break above this basically 70, 71 area, I'm going to be looking to play it long all the way up 72, 72, even to this trend. We'll see where the 20 SMA ends up, even 50 SMA. We got SMAs crossing under SMAs. On the flip side, this is kind of that same thing with KO. 200 SMA, and 9 times out of 10, one of the strongest levels that there is on the chart. If we are at it, I am trading around it. So that is the other long entry, is basically just a dip down into here at 67, 70 area, this 200. However, I still don't love that upside. Couple of bucks upside, potentially. But couple bucks upside, that's great. It is nice, I like that trade. However, we give up this 67, 70 and this 200. I think my personal opinion is we get that $5 move down to here, and we likely get it with some velocity. As options traders, that's why I preach so often that entry is the most important thing, because you want your trades to work and you want your trades to work quickly, because that's how you make the most money. When you sit and ride trades for 2 weeks and they go green, red, and you see 5 or 10%, there's just it's not good opportunity cost. So I like to look for setups like this that uh, if this break happens, we get to sell fast, is my opinion. And so that's why I personally do kind of prefer shop to the downside. We'll see if it starts getting an ER run up, anything like that, tries to break this trend into it, proves me wrong. But for me, I'm kind of liking that shop to the downside. I do think and I've actually talked about Zach, if anybody knows Zach in here. I do think that when rate cuts come, of course, nobody knows when rate cuts are going to come. Uh, I think shop will be a leader because that will just kind of show, people will be able to they'll want to buy those things from those private sellers and spend a little bit more money when they feel like their money is, working for them better. And so I do think shop could be a leader in that small cap area when we get the rate cuts, but just a little too early on it now. So again, want to talk a little bit of contract selection on it, obviously, because we've been trying to do that. Any bounces here, if I'm looking for this volatile bounce off of here, I'm sticking as close as I can. I might go a little bit shorter time, but I'm hitting these 70s. If we're, 70s, 69s, if we're pulling back to this 68.50, I'm gonna look for the quick bounce. However, if we start to get this close under this 200, that's where I will want to put on a little bit of time, and I would feel, slightly more comfortable. And obviously we only get the 5 strikes a lot of the time with the monthlies. I would feel a little bit more comfortable being that $6 or $7 out of the money. I know that's 10%. But if we're breaking 67, the 65s might be a little expensive, whereas the 60s are going to offer a high enough delta, shop moves fast enough with a month's time and a $5 drop, and you're winding up, within a couple bucks of the money. The 60s can be a reasonable trade. So shop, like I said, can be traded both ways, but for me, I'm personally leaning down. But we'll see what happens. Rudy, yellow just means weekly. 17s the gray ones are either going to be monthlies, quarterlies, whatever it is. They're going to be, they're they're the normal option expirations. They consider weeklies non-normal, monthlies and quarterlies are normal. They're just yellow, so you know that you're clicking on a weekly. And typically what it means is that the volume and open interest will be lower. That's really all it means, because no matter how much people want to believe big money is just out here trying to screw over retail traders, in reality, big money is trading monthly contracts and they really don't care about, your same days. Okay, so shop, final one for me. Disney. Some that I'm personally a little surprised at Disney. I mean, it put up a really nice move after that earnings, did 25% or whatever. No denying, awesome move on Disney. But man, I've just been a little surprised at the selling. So main thing that I'm kind of going to be watching for, trend is down, giving up major SMAs. The trade that I want to catch, and this range that I have on here is really from this earnings week, that right after that earnings week, we caught this pop here, me and some people in here, we caught this pop here. I know some people tried to catch it here, got smoked a little bit, and then we were able to catch this nice next pop out of it here. So my dream is Disney keeps pulling back, maybe we get another candle here, maybe we get another candle here. If we can get trend break right around this the range bounce, that 110.60, 111.10, something like that, then I will really be looking to get long on Disney. I think they put up great earnings. I think they have some good forward guidance. Earnings is still far enough away that we can give it a couple days to work. Of course you can try to short it down to here, but I mean, this thing's dumped $10, $15. I'm not trying to chase that short anymore. Looking for that bounce down here. Disney, again, just a classic boomer stock. I mean, it's as classic as it comes. I don't Right, on a Fridays, I'll trade some weeklies on it. But again, it is almost always going to be monthly contracts or at the very least 3 week out contracts. One of the, unfortunate things with Disney is they've moved to 5 strikes on on all of the monthlies. It happens a lot when you get over $100. But if you do want to trade, and this is kind of what we were talking about, I want to point this out. I like to be at the money on any of these cheap names. So just to give this example here, if we're buying this dip to 110, I don't I don't want to be in 115s. I definitely don't want to be in 120s because that is just way too far out of the money for me. So on something like Disney, I'm actually frequently gonna look at the weeklies, see if I can find a week or find a strike that has good enough volume for me to want to get in. I'm not like I don't want to buy a contract that the bid's 189 and the ask is 420. I have no interest in that. Here's another one. Yeah, this is the highest volume on the or open interest on the chain. The spread is $120. I have no interest in that. So Disney's one where I might look at some of these weekly expirations just to see, hey, is somebody else looking for a move? Is there something with high enough volume and open interest that I'm only got a 10 or $15 spread? And I might go a slightly closer expiration on it. Because you can do the monthlies, but when you're trading something that is low IV, slow mover, a buck move on Disney is a good day for it. It's obviously had some big ones recently, but those are uncommon. I I don't like to go for the $5 strikes. I like to kind of be able to split that gap if I need to. And so that's Disney for me. And then of course, again, we get back into the range, me, short it down to the bottom of the range. That simple stops above it. But I'll personally be looking for a little bit more sell, hopefully, and try to catch that bounce. I might end up missing it, but that's what I'm looking for. Really good question. I wish I had the answer for that. As I recall when I drew it, I mean, let's try to go. Let's just try to go back and see what I was thinking when I drew that. As I recall when I drew it, I waited to see where highs were rejecting. Because still not enough time. I waited to see where highs were rejecting for a couple of days because as I recall that big wick, that is just earnings day. And so yeah, I'm assuming what I did was back here, we had that big push up, wicked, and then sold it. Oh, I probably went close a day. That was probably my interest on it. It looks like I just went close of day. And then as we can see for those like following days, it ended up being kind of the level area to break. So I'm sure that's why I did it that way. I know that's not, I am not going to tell you that marking this whole wick as the range is wrong. It's absolutely not. This is just how I went for it. I saw it work, so I leave it. Can you explain volume versus open interest? Open interest is updated one time a day. So if we're looking at something like this, Disney, when we see open interest 4,315 on these contracts, that means from yesterday to the day or today, people swung 4,315 contracts on it. However, volume shows us how many were traded today. And there was only 159 of these contracts traded today. So open interest is just what people swung. Volume is today. And open interest, it can be yesterday, the day before, the day before. People could have been holding these for months. But it just tells us how many contracts were open from yesterday to today. Oh, yeah, Rev got it. Okay, well, we ran slightly longer than expected. If anybody's got to get out of here, thank you so much for being here. Really appreciate it. But we got a few more minutes, so if anybody has some questions, oh, Rev said Nike. Or any questions about any of the other trades, feel free to ask away. Does this work with crypto? Yeah, I got to tell you, yeah, it actually does very well. TA works very well on crypto, as shocking as that is. I mean, I guess it makes sense because it's mostly retail traders passing coins back and forth, so they follow the retail rules. But yeah, well, I mean, Rev, is that what you're watching there? You could even been watching that. That's one, but I would be pretty interested in this one. As far as I'm concerned, Nike is breaking out. Going for that gap fill here. Let's see. And you could run it all the way up to here, but I was just kind of interested with these lows. Pretty dang easy long with the stop under 95 on any pullback, in my opinion. Lift. What's Lift been up to? Oh, clobbered. I mean, 1550, 1540, my opinion. Yeah, we might have to give up that 1650, but that bottom of range is coming, in my opinion. I mean, I don't trade them, but I'm sure people are like, look at that head and shoulders too. It's kind of there. Long Apple shares. Double-edged sword. I mean, yeah, you could, but be ready for pain. It's not going to be horrible. It's Apple, but I mean, there's a lot of people, myself included, that, especially if this one breaks for us, that 162 is kind of in the cards for me. Obviously never a horrible time to buy Apple shares, but don't expect big gains out of them. That's not what Apple is for anymore. That's not the days of huge gains from Apple are over. They made that decision off the back of their last split, at least dollar wise, but Apple ain't going anywhere. Hold that thing for 20 years and you will be happy. Why do you see gaps? Gaps are just the market closed and then news came out, whether it was earnings or just news or whatever it was. And so on something like a daily candle, the day closed right here. The day opened right here. So you see it reflected as a gap. However, if you go into, like a 4-hour time frame, well, this one still was, because that's probably like a Friday into a, oh no. Oh yeah, this one still just provided a gap, but this gap likely not reflected, because you don't see those on the daily. Can I show how to trade an inside candle? If I knew where one was, yes. Let me think. I traded a nice inside candle break the other day. I think it was on QQQ. As far as like playing a 15-minute inside break. Oh yeah, so it was this one right here. I played this. And this might not be, perfect for everybody. And it's trickier because it took a long time to play out. However, we have a candle here. These following 5 candles fall within this candle. So when people trade inside candles, you can think of it sort of like a range. You want to short there's 2 ways to trade it. You want to try to short near the high of the candle that you're inside of with a stop above it, or you want to wait for the break of the low of the candle. And so that's what this one did. I actually just had a short sell order right here. And so I didn't catch this move. I caught this move and I caught this move, and I was perfectly happy with that. And how I played that was we broke the candle we were inside of. This is even another one. This could have been considered an inside candle. And it's tricky because you're going to be hammering it in the middle of a candle, but it breaks and you short it. So an inside candle is basically a range. Well, these are the inside candles, but they're inside of this one, which is basically a range. So you trade it like a range. Yeah, but C-Rev, I disagree. I think India will pick up all of that in a heartbeat. Rudy, the closer you get in contract price, it is more expensive. It is frequently the safest bet. However, the dollar risk is higher. Percentage risk is lower, but if you are buying those at the money contracts, you're going to have the highest delta. And so if you get a buck or two move against you, the delta can really hurt you. I, of course, think 99% of the time going right at the money is the best bet. Really the only time you want to be out of the money, you still want to keep it reasonable. I mean, we can just use this one right here. If you're shorting, or we'll go for this one. If you're shorting SPY and your target is 437 and you're shorting at 439, don't be in 436, 435, 444. Be in this 437 or QQQ rather. Be in this 437 because it's reasonable, CMG, and is it a good long-term stock? I mean, that thing is just insanity. I haven't looked at it in a long time. I don't even look at this. I mean, Yeah, I'm sure. I don't think Chipotle's going anywhere, but like I don't love buying it right here at like 3,000, I mean, at least I would personally be waiting for a dip on this thing, just myself, just me. But it's Chipotle. People love it. I've never eaten it before. Yeah, I know the split's coming. Uh, uh, So I'm gonna say this, and like it's probably gonna bite me in the ass. You should never buy shares before a split. I mean, especially as we're getting this close. I mean, if you've been in shares for months and they announce the split, great for you, But like, don't buy split shares here. I mean, and this is just a statistic. I'm sure I'll be wrong. Like, what Chipotle's gonna split and go to the moon or something crazy. 9 times out of 10, some splits, it gets creamed for a while because people are up really big, and maybe somebody, a rich person, like it was like Amazon. Maybe they owned 1,000 shares of Amazon and that was what they wanted their position to be. Well, now we get the 20-to-1 split and suddenly they own 20,000 shares of Amazon. They're going to reduce that position down to where they want to be. Maybe they only want to hold 1 or 2,000 shares. So you can frequently see big selling on the backs of splits and then you buy those dips. Or you get into like this situation, which is just the most insane thing ever. Anybody who bought for the Tesla split is deep underwater. I mean, they're down 50%. If you were buying anytime 2 months before that split, you were smoked. You should have stopped out of those shares a long time ago. But it's just crazy to think. I mean, Tesla is not doing good. Tesla has never performed well after the split. I'm not saying the split caused it, but the Tesla bulls who were buying, the whole way down and buying into the split and saying, oh, we're gonna make millions, they didn't make millions. They're big red. So always be careful. Amazon, trickier one to look at because of when the split ended up occurring. We did take a big bounce after it, ultimately sold more, but that was the year. This was a bear market and they split halfway through a bear market year. So this selling is a little more, you didn't expect Amazon to sell off 50% or whatever it was post split. But that was a trickier one. But then again, buy the dip worked spectacularly. Nvidia, another one we can always, Nvidia is always good for a look. Let's see. There's the Nvidia 4-to-1 split back here. This one I was wrong on. My dad even hit this, I remember. Sold a little into the split, bounced really nice, and then got caught up in the 2020 the bear market and got obliterated. I mean, got it one. Yeah, it also ended up eventually going down 50%. Well, BH, um, I guess you didn't listen to anything I just said because we were literally just talking about Chipotle before this because you asked the question. But we'll go back to it. I personally would not buy shares before the split. Long story short. But if you're in shares, ride them to the split and see what happens. But always have a stop in mind or at least a like position reducing amount, because Chipotle is going to go from a relatively low float stock to an extremely high float stock that is cheap. And so it's going to be harder to move, when all of a sudden, I mean, here in a few days, we'll see what it is, but Chipotle is going to be give or take worth $60 a share here in, uh, well, I guess a couple months. So, be careful on that. Can it keep running into the split? Absolutely. But it also, I think it's ran $1,000 on, uh, it's also ran $1,000 on the back of the split news. So you always want to be a little careful there. Okay, well, if that is gonna do it, right on, everybody. Thank you for being here. Yeah, thank you all. It was uh it was a great class. I love talking to these slow movers. Thanks for all the participation. Really great questions tonight. Thank you all for being here. I appreciate it. Yeah, thank you all so much. And uh we will see you all tomorrow. We're Got a Friday ahead of us, so trade safe, have some fun, and we will talk to you all then. Thank you.